Right guys, welcome back to another video. And while I was away on holiday, I got this request on YouTube. I think someone commented on one of the recent videos, and basically what it was is, can you do sort of a video explaining how you backtest CTS? So if you're not aware what CTS is, basically what it stands for Combined Technical Score. And what we do is we sort of look at zones. So let's say you've got this zone, and if you've got things like lining up, so let's say you've got a fib extension lining up. Whoa, right, okay, I don't know why I can't. Right, say you've got a fib extension lining up with like an equal measured move with structure, like let's say this is 1 point, this is 2 points, so you sort of have like a scoring system for it. And let's say the score adds up to 5 and you've got a minimum score of 5, then you do whatever, like you either take the trade or you don't. Let's say you have a minimum score of 3, or like you have a score of 3, maybe you still take the trade but with half position size. So there's so many ways to do it, but it's basically just a scoring system in a way, to do with all the confluence in your trading. So it was basically how do I backtest that? And I haven't really backtested it ever, and I'll sort of go over it live with you and my thought processes and whatnot. So I'm just gonna walk you through it. I'm not gonna plan this ahead. I'm just gonna let you see what I'll do live. And yeah, there's pros and cons which I'll get into maybe halfway through the video and whatnot. But I'm gonna start off on Euro Swiss because obviously I skipped ahead a bit to see what happened, just to make it as a good example at least. So what we've got here, I'll do the next candle, is a new, basically I'll use the daily, 1 hour, and the 15-minute, doesn't matter, right? So this is June 20th, 2019. So 15 will go back there enough. So like I said, starting off on the daily, and I'm doing a 3 time frame analysis just because this would be harder than obviously a 2 time frame analysis and so on. So it only gets easier, and I'll sort of walk you through my preferences and what you could use it and how you can use it. But let's say your daily is sort of what you decide everything on, whether you buy, you sell, that sets your bias. So what I'll do is, in this situation, we've got a lower low, lower close. So what I'll do is I'll draw a line, red line, or doesn't matter obviously, and I'll see where we are in relation to structure, right? So I think a good thing to do at the start of your charts is just to actually get these support and resistance levels drawn out, if that is obviously the center of your philosophy, and it is of mine. So I'll sort of start drawing them out already, because it will simplify things a lot rather than you having to just keep on scrolling back and forward. So obviously there's no real right or wrong way to sort of draw them, and we all pay attention to minor levels. Let's say this one, you can make a case for this level as well, but I'm sort of drawing the more obvious ones for me that stand out for me personally. So this is what I'll do, and then what I'll do is extend them to the right 600, whatever, just so it actually extends and I can see them on my screen. Like I said, so that way I'm aware, if we are at minor, major level structure and whatnot. So I know that this is a major level right here, right? It's quite a big swing point, you can say, or a fairly major level. And that's where we're currently at this inside level of support here. So, looking back on it, let's say, I don't really pay attention to inside levels of supports, and that's a hypothetical for me. Personally, I respect them, so I'll take targets off at them and whatnot. But let's say because we was in that downtrend, that we don't expect this level to hold a complete reversal, maybe just a bit of relief, and we're still looking for the trend to continue all the way down here and down to these levels respectively if it breaks this level and whatnot. So here's how I would approach it, right? So I've got this new low here, and I'm in a bearish trend on the daily, right? I've got this new low, here's my outside return here. So if I want to be involved, I can start doing a CTS score up in this kill zone. So where do I want to get involved in from this downtrend? This is my kill zone, so I can start building my confluence. So what I'll do is I'll take a fib, maybe, I think fibs are quite easy to do, and you've got 382 lining up here. You wouldn't see any more fibs, to be honest, from here, unless obviously you can do a fib from here to here. So you probably line up with a 786 in that area. So in this particular zone here, I would sort of add it in like this, just because of this little level of structure as well. You know, you can build a score for 2. Now already you see something that's a bit more, not discretionary, but you know, it's something to be aware of, that especially in trend continuation opportunities, the kill zone is so big that, you know, there's going to be fibs everywhere. There might be fibs here, 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 and you can't really have them all, you know, I don't know, I wouldn't give them the same value just because it's like the whole kill zone. Do you know what I mean? As in, let's say an equal measured move completes here, then I would only look around this zone. I wouldn't count this fib just because it's in the zone. I wouldn't give it to add to the score. So that's sort of dangerous because the kill zone is quite big. So, you know, something to be wary of. And little note before we sort of go, you know, further in this chart, all these levels of support, I would be looking to buy at them as well. So you sort of have to make 2 cases, one for selling and one for buying. So obviously you're selling into this downtrend, but you can also be a counter trend trader. So you might want to start making a case for this zone here. So I'll probably do that right now. Let me see, I'll do it. So yeah, so right, see, so you know, first things I'll do, I'll take a fib, and there isn't any real right or wrongs where to take fibs. Like, you can make a case from here to there, right? Me personally, I'll take it from this level here, so I'll sort of adjust it. I'll take it from here, and it's just my eyes. So as you see, I have a 1-4-1-4 lining up there, you know, nothing else really. You can take a fib inversion if you want. Again, you have to value these yourself. So you could say, you know, inversion I value at, you know, 1 point, or, you know, an equal measured move I value at 2 points. You know, that's down to you and sort of your philosophy. You know, just the fact that you've got some support, you know, you can value that. Equal measured move will take us a bit lower, so, you know, I wouldn't add it as in there. So for this, I would only give it 1 point or 2 points, including support and this little fib. So again, do you consider the 1-4-1-4 as a major fib? You know, it's down to you and your philosophy. And then what I'd also do is actually go on the lower time frame. So in this case, I said it would be the hourly, and start building confluence from there as well. So, I mean, that's quite far, so I don't think we'll get any confluence, let's say, from here to here. You know, it's a valid swing for me. I'm not really forcing it. We got 1-6-1-8 lining up, so we've got some sort of more detailed area at the bottom of this where there was that 1-4-1-4 previously lining up. Aside from that, I wouldn't really see any more swings. They wouldn't really work. I mean, again, you can always make a case for these, and you can make a case for so many swings, and you know, that's one of the dangers for it. But again, 1-4-1-4 that lines up here. But you know, that's for the counter trend approach for it. So there's this zone that we've got 3 points worth of 3 points worth of confluence, and obviously you can look to build out for this zone here, which, you know, there's not too much difference from the daily what it was already. So I'll just leave that there. The fibs would be the same from this swing point, from wherever. So, you know, you sort of play next few candles, and then obviously these little swings are created, so you can start using them for confluence with, let's say, extensions from here to here. You know, do you have another fib lining up there and whatever? So you sort of keep on going that, and it is quite long because you have to look at both sides of it, and you know, that's probably one of the biggest downsides to that. But as you see, you probably just keep on the daily perspective, and you sort of have to keep on going back and forward. Or maybe you don't value the hourly confluence, maybe you only do daily confluence. Again, it's just up to you. So you're getting this pullback now, and you know, what's the score that you need? Let's say here we had what, 2 fibs. We had a 786 and a 382 from the bigger swings lining up. So you know, you'll be looking at that zone. We've got a few little things put in here on the hourly, so maybe we've got some more confluence. But one thing to be wary of is you want to sort of, how do I say it? Like, you want to be careful of not overdoing it. You don't want to be forcing stuff. Like, you know, you don't want to be sat here taking a fib from, let's say, here to here, just because you want to force a fib in the zone. You know what I mean? Like, this for me is just quite irrelevant of a fib. So you know, just one of the dangers when you're looking for stuff, because if you're always looking for something, you're going to find something, right? So I'm going to keep on playing on the hourly. Like I said, I don't really know what happens particularly, so I'm sort of going along as it is. And I think we're going to push down now, create this new low we had. Yeah, so, you know, we're still in a downtrend. We couldn't get involved in this trend unless, you know, you had some sort of confluence here. Maybe on the hourly you had more confluence, sorry, or in this earlier zone. You know, this would be a decent level of structure here to look at for a selling opportunity. So maybe, you know, you built out your confluence for this zone. And like I said, there's so many things going on that it does take a while, and it's probably one of the things that I sort of, you know, deterred me away from it, just because it takes so long. And it's easier if you focus on one thing. So let's say you only focus on counter trend moves, so you're only you know, let's say highlighting these zones here, you know, major structure, you got, you know, this level of structure here, like the ultimate swing points, you can say. And you know, you're only doing it there. It's much easier because you're looking for just one thing and one thing only, whereas now I'm looking at two. I'm looking at continuation and counter trend, which obviously is doable, but I don't know, I feel like you can, you know, force things, which I don't really like about that. But we have, I don't know why it got deleted, my box, but this got left in. So I think the box was somewhere there. This was the one we was looking for a buying opportunity, right? And this is the little area that we was basically looking at. This was the 1618 and the, wait, was it 1618? It was the 1414. Do you know what? I'm going crazy. Yeah, I don't know, but I drew it on for a reason. I think, yeah, we had two things lining up there. So either way, auto, let me see. But yeah, so had two things lining up there, and there was some confluence here. Let me just double check, because yeah, so this is the level of structure we was looking at. So we're looking at a buying opportunity currently, and you know, meanwhile this is happening, you've got another selling opportunity in this downtrend going on, because you know, we have got these new lows. So you know, if you want to be a seller, you have to build out your CTS for a selling opportunity as well. So where is it? You know, this would be your kill zone. Maybe you want to narrow it down to this, you know, because this is a minor level within, but ultimately this is your whole kill zone. So maybe you want to start putting a CTS score there. You know, maybe you want to take a fib, but look how many fibs line up in this whole zone. You got three, all of them, right? All of them. You do something like this, maybe what lines up with what, and that's what I mean. The zones are so big, you can be vague with it, so continuation is harder, but this is more accurate in a sense. And as you evolve, as price evolves, you know, you can start building out your confluence. So now we're near this, you know, do we have any more confluence? Things haven't really changed from here, just because, I mean, you can probably add an inversion here. Oh wait, this was where we had the, never mind. So yeah, this, you can probably add an inversion. You got a 618. Where was it? Just, yeah, in that air zone. Again, that was the thing that was newly formed. Obviously this was the swing we was looking at prior to this, and that's where, yeah, that's where I was getting the 1414 from. So you know, you've got these little confluences, you add them up. Maybe you're going down on the hourly now because we're nearing it, so maybe you want to start building your case on the hourly as well. Maybe count the daily as 2 points and these as 1 point. Do you know what I mean? So it's completely independent, up to you and what you value. But look, extensions, fibs are sort of the most easy way to do it. You can probably see I'm just doing most of them, but you got 127 lining up in there as well. If you want an equal measured move, obviously we haven't really got pullback, but if this pullback comes up to somewhere there, then you know, you've got an equal measured move. Aside from that, yeah, there's just not too much going on. So when price actually does come down to this zone, or if it does, obviously you know, that's when you sort of start looking for your reason for entry. So whether that's a limit order, high close, again you can look for another fib extension here. Do you know what I mean? You keep on going, so I don't need to do too much of this. Just want to see how it reacts at this level, and as you see, we sort of break through it. So again, if you had a limit order there, you would have probably been stop, or it depends again, stops, targets. Where would your stops and targets go? Do you decide this off the daily? Do you decide this off the hourly, the 15, the 5? You have to sort of have your rules in there for that. But let's say on the daily you're doing target at this level of structure, it stops a few pips below. Obviously you've got this risk reward, you're involved, and this could be a trade you're in. And I don't know why my drawings disappear, but we just play it out, see what happens, and we do get some bullish reaction. Obviously if your targets were off the hourly, probably would have taken it off here. So not a bad place to get targets off. So maybe this was a winner. Maybe you entered on a 15-minute, whatever it is there, what's on the 15-minute here, higher close, but that would be below the structure level. So again, it's all to do with your entries, your zones. But to sum it up, this is what I would do. So I would have your time frames. You'll know which time frames you're looking at. Can I back out replay mode? There you go. Alright, so you'll know which time frames you're looking at. So let's say you have your daily, and then you use that for confluence. Maybe you use the daily structure levels, minor or major, it depends how you rank them. Maybe you rank them for 2 points or 1 point for minor levels of structure. I'm not too bothered about major or minor level. To me, it's just structure. So I would personally just give it, like, say 1 point or 2 points because it's higher time frame, right? Let's do that. Structure, maybe a daily fib is more important to you than an hourly fib. It's all to do with your philosophy. So you can do 1 or 2 on that. Equal measured move, you can bang another 1 in there. Maybe you've got a harmonic pattern, lining up with it, so you might want to rank that 1 or 2 or 3, depends how much you value it. So that could be your daily things, right? Then you move on to the next one where it's like the 60. So you can have your structure, right? You value that only at 1 just because it's the lower time frame. Maybe the fib, again, do you value it the same? Do you value it higher or lower? Maybe both. So I'll give you the option of 0.5. Equal measured move, obviously. I'm just going to leave it as that. Again, 1, however much you value it, and then harmonic pattern. What else is there that you can look for? RSI, right? That's another thing. So RSI you can look for, overbought, oversold. This could go with the daily as well, doesn't really matter. And then the 15 or your lower time frame, if you have one, I would use for an entry only. So I wouldn't build out confluence on the 3 time frames. I think it's just overdoing it, just overcomplicating it. The easiest would be just 1 time frame, obviously a bit harder with 2. And you want to have your score. So you want to say, let's say if score of 5, then take trade, or 5+, let's say, right? It could be like 6 to 10. I mean, I'm giving you random examples. Sometimes you wouldn't even reach these 6 to 10 numbers. So 6 to 10, I do 1% risk. Yeah. Let's say 11 to 15 score, you do 2% risk, just because it's more confluent. So technically, it should be better high probability trade. So these are a few rough guidelines, a few rough opinions from me, just what I would do personally. Like I said, I'm not a huge fan of what's it called, doing CTS in trend continuation scenarios such as this, clear downtrend market, just because the kill zones are big, right? The kill zone for this is big. You can fit many fibs in there, and look at that. So this is the second one, third, and the fact that depends how you want to do it, because if you're looking at any fib in this zone, you're going to be building confluence that in a way you're just making a case just for making the case. Whereas if they all line up, let's say you've got structure here at the 382, you've got structure here, so the blue line structure, you've got 382, maybe you've got a equal measured move right there, you know, that lines up with some, you know, nice 127 or 1618. Let's pull it down. You know, I'm not drawing it accurately, just for illustration purposes. And you know, all of this lines up in this very specific zone. Then yeah, you know, that's sort of the optimum way to use it, and that's why counter trend is a bit easier with the CTS scoring system. If you do it like this at structure levels, as you see, the zones are much smaller. So what just flew by. You know, it depends how you want to draw your zones. You can do it for inside levels as well. And you know, look at how small this zone is. So when I do take a fib, do we have anything lining up in any of them, right? So you know, the 50 is here, 382 is just above, so you might not want to count that. 618, where is it? So you know, it's subjective. You know, I wouldn't personally use the CTS system, even though it's good for confidence. I think you can overdo it, and that's the dangers of it. So yeah, again, it's up to you, but the most important thing in trading is it has to suit you and your personality. So as always, hope you enjoyed, and yeah, if you got any more requests to do videos, yeah, put them in the comments. So yeah, in a bit.